Hi, and welcome to the Stock Scores Market Minutes for January 16th, 2017. This week's topic, adapt to the market, and then we'll do the trade of the week on Sanchez Energy. All right, let's get into this week's topic. Different market conditions require different approaches. How you enter and exit a trade in an uptrending market will likely be different than you would in a sideways or downtrending market. When testing your strategy rules, consider how market conditions affect the results. If you do a more sophisticated analysis, bringing in more macro variables, you can really improve your overall results. For example, in the last few weeks, we've had a sideways to slightly downward trending market after a very strong run higher after the election in the US. That was, of course, in November. And so the results of different exit strategies were very different in November than they are now because we have a different market condition. And so in your analysis, if you consider what is the overall market trend, or what is the overall volume of a stock, or is the stock abnormal or not, these different variables will have different results according to the market conditions. So try to work that into your analysis. Well, here's the chart of the S&P 500 over the last 30 days, this a 60-minute chart. And you can see over here we had a nice upward trend to start December, but since that time, we've been stuck in this sideways range with a little bit of a head and shoulders bottom here. So what we're looking for now is, do we break out of this head and shoulders pattern and go into the next leg of the upward trend? I think that's the probable outcome, but until that happens, we're in this, what I'll call a neutral sideways trending market, where you want to be more aggressive on your exits, taking profits quicker, and focusing more on stocks trading on their own story, characterized by abnormal volume. Now, looking to the longer term chart, we still have that nice upward trend. We kind of flirted with breaking it back there. And although we've been quiet for the last 5 or 6 weeks, we should continue higher in this upward sloping channel because we're in the channel. Until we break down out of the channel, we don't want to get off the bullish outlook longer term. Now on the smaller cap side, the Russell 2000 index, I've made this a daily chart just to drive home the really boring sideways trend that we've had since about the second week of December. Now we are going into earnings season full swing next week. That'll drive a lot more news, and we may start to see the market move again as the investment community prices in an improvement. If in fact that is the case, we'll have to wait and see. Of course, we could also find that earnings are negative and the outlook is negative, in which case we may see a breakdown out of that pattern. So what's critical going forward is, what direction do we break out of this sideways range? Now in the Canadian market, although we've been a little bit quiet in the last week or so, we are in a better shape longer term compared to the S&P because this is trending higher. We're getting money coming back to some of those commodity areas that really got beat up, more so because of a bounce back from oversold conditions than it is a strong indication that the outlook is better. I don't think the outlook is much better. It's just stopped getting worse. And so you're seeing some money flow back into those sectors. And you see that in the longer term chart. We've had a nice comeback over the last year or so. We're in this nice upward sloping channel, but critically, we've broken through to new highs on the TSX. Now, often when that happens, you'll get a little bit of a profit taking in the short term. So it wouldn't surprise me if we see that, but there's no sign of that yet. So remain long the Canadian market. Now on the small cap or even micro cap side on the TSX, we had that break of the flag a couple of weeks ago. I talked about that here. We've continued higher. We'll probably get stuck up at the top of this range, but certainly after a few months of a really negative, or not so much negative, but complacent market on the TSX Venture, we are seeing that start to pick up again. Now on the Treasury side, this is an important market because it really shows how the outlook for interest rates is changing. This sharp downward move there was an indication that the market felt that interest rates were moving higher. Now we've been moving in lower interest rates for a very long time, and the bond market got a little overextended and now rolling over a little bit. Of course, we had the Fed raise rates in December, and a lot of different things happening in the US with the stimulus that is expected out of the Trump administration. So there's a lot of reason for inflation concerns. Of course, that makes interest rates go up. Remember, if this chart is going down, that means the bond market is going down, and that means interest rates are going higher. Now, in the last few weeks, we've had a little bit of a bounce back from oversold conditions, but we are still in that downward trend. And although we can maybe bounce up to that trend line, I don't see a reason to think that interest rates are going to start to go down again just yet. We need this downward trend line broken. On the US dollar side, here we had that nice upward trend in the US dollar, again on the heels of the Trump win. We see a lot of buying of the US dollar. We just got through this resistance, barely, and really just getting stuck there. Now, I think we do this for a little while, and then ultimately, if the US economy does in fact grow the way people are hoping it will, you'll see that breakout to new highs for the US dollar. For now, my thought is we're probably going to come back or go sideways in the short term. The drop in the US dollar over the last couple of weeks after a pretty good rally for a few months prior has given gold a little bit of a boost. You can see there we've had 3 up weeks in a row. We are still, I would say, below the downward trend line. If we drew this line like this, we're just kind of right at it. And so my thinking is we'll probably see gold get stuck in the next week. I thought it was going to happen this week. We actually had a little bit of profit taking in the midweek on gold, but it didn't materialize. And ultimately, we are still trying to test that downward trend line. We'll have to see if it can break the downward trend line. My expectation is we do this, and then we either move to new lows or we break that downward trend line. But I don't think we're going to break the downward trend line in the next week. Typically, you stall there first and then try to break through it. Oil chart, really a sideways, boring chart. We've been stuck in this range for a while. The volatility getting very low over here on the right. We need a break out to the upside for the buyers to get enthusiastic, or a break to the downside for the sellers to take control. Right now, we're stuck in that range. It's very whipsaw oriented, tough market to trade right now. I would say generally stay away from it until we can get a directional break out of this range. Fear not a factor. I sometimes wonder why I show this chart week after week, because we only get very brief little jumps in fear once in a while. But that's, I guess, why we show it. This shows the market is quite complacent. And one day you will see this spike up and actually rally as the market corrects. Will that be next week? Probably not, but it could be. And so we watch this chart every week looking for signs that there is real fear coming back into the market. And this is a way to trade fear, but until you see that fear coming back, generally avoid trading the VXX and its derivatives. So my ratings then, bullish long-term on the US market, neutral short-term, stuck in that sideways range. Canadian stocks bullish on both time frames. I would say a little overbought, probably due for a little bit of a pullback near term. Gold remains in a long-term bearish trend, but short-term a bullish trend. It is coming up to resistance at that downward trend line. So I think this may stall in the next week. Oil neutral on both time frames, stuck in that sideways range. US stocks are building a sideways base, really reconciling the gains from November. That's a healthy thing. Focus on abnormal stocks in this environment and use a more aggressive exit strategy, because you're not going to get the follow through on your trades until the market can start to trend higher again. Canadian stocks are outperforming, but they are due for a pullback. Gold is strong, but it's coming into resistance where it will get stuck. Oil stuck in complacency, and fear is not a factor. All right, let's get to this week's trade of the week. It was a day trade I did on Friday on Sanchez Energy. The reason I had it on my watch list was the very abnormal volume. This is a 2-minute chart here, and you can see the volume on Friday was very strong. Now, one of my indicators is something called a message candle. It's a little white dot here, and I look for message candles that break downward trend lines in certain conditions, and that happened right there. So that was my entry point. Ended up moving up almost 5-to-1. That was 5-to-1 risk reward. And if you use my trail by 1, then you got out here at 3. If you held until the end of the day, you got out at just below 3. So pretty similar results depending on the exit strategy. But this one really drives home the kind of trade that's working in a sideways market, focusing in on the stocks trading abnormal volume, because they will have less correlation to the market indexes. And that's important because the market indexes lack direction. So that's the kind of way that you want to approach the market right now. Once we break out of this range, up or down, we can change that. But for now, that's what's working. All right, well, I hope that you've enjoyed this video. If so, please like the video. Please subscribe to the Stock Scores channel. Tell your friends, tell your neighbors, tell your enemies. I don't care. Tell as many people as you can. Have a great week in the market and trade well.